Want to build wealth through real estate without owning a single property? Forget the headaches of home ownership. If you're ready to make money the smart way and skip the risks, you're in the right place. This is an exclusive guide to understanding how you can invest in real estate without the headaches of property management. We'll highlight various approaches to help you tap into the lucrative real estate market. Keep watching, and I'll share tips from successful investors that could change how you think about real estate. First, we have real estate investment trusts, REITs. Real estate investment trusts, REITs, are companies that own, manage, or finance income-producing properties. They provide a simple way for everyday investors to get involved in real estate without having to buy physical properties. When you invest in a REIT, you're buying shares in a company that handles a variety of real estate assets, such as apartment buildings, shopping centers, and office spaces. One of the biggest advantages of investing in REITs is their liquidity. Unlike physical properties, which can take time to buy or sell, shares of publicly traded REITs can be quickly bought and sold on stock exchanges. This makes REITs much easier to trade compared to traditional real estate investments, allowing you to change your investments as needed. Investing in a REIT also gives you access to a mix of properties, which reduces your risk. Instead of relying on just one property to perform well, your investment benefits from the income generated by multiple properties. Additionally, REITs are required by law to pay out at least 90% of their taxable income to shareholders as dividends. This means you can expect regular income from your investment, making REITs an attractive option for those looking for steady cash flow along with potential growth. Did you know that David Einhorn, the founder of Greenlight Capital, is a big fan of real estate investment trusts? He often invests in REITs, looking for those undervalued gems that can provide solid dividends and price appreciation. It's a savvy way to tap into the real estate market without the hassle of owning property. Up next, we have real estate crowdfunding. Real estate crowdfunding has become a popular way for people to invest in real estate without needing a lot of money. These crowdfunding platforms let many investors pool their money together to fund various real estate projects. You can invest in specific projects such as apartment buildings, shopping centers, or new homes without having to buy property yourself. One of the main benefits of real estate crowdfunding is that it is accessible to more people. Many platforms allow you to start investing with as little as $500. This means that everyday people can get involved in real estate investing, something that was once only available to wealthy investors or those with large amounts of cash. With crowdfunding, you can choose the projects that interest you the most so you can invest in what you believe in. Another advantage is the potential for good returns on your investment. Depending on how well a project does, you could earn a significant profit, especially in strong markets where property values are rising. This makes real estate crowdfunding an appealing choice in today's economy, where other investment options may not provide the same level of returns. Plus, by spreading your money across different projects, you can lower your risk compared to putting all your money into one property. Now, have you heard of Dustin C. Pangilinan? He's one of the co-founders of Fundrise, one of the leading real estate crowdfunding platforms. Pangilinan has made it easier for everyday investors to access real estate opportunities. Fundrise allows individuals to invest in real estate projects without needing large sums of capital, reflecting the democratization of real estate investing. Now let's take a peek at real estate mutual funds. Real estate mutual funds are a type of investment that brings together money from many investors to create a diverse portfolio focused on real estate-related assets. These assets can include real estate investment trusts, REITs, real estate stocks, and even direct property investments. This investment approach is great for those who want a hands-off way to invest in real estate without getting involved in managing properties themselves. One of the main benefits of investing in real estate mutual funds is that they are managed by professionals. Real estate mutual funds allow you to spread your investment across different real estate areas, which helps reduce risk. By diversifying your investment, you lower the chances of losing money if one property or market goes down. Many of these mutual funds also have low minimum investment requirements, making them easy to access for a wide range of investors, from beginners to those with more money to invest. This combination of expert management and diversification makes real estate mutual funds an appealing option for anyone looking to invest in real estate without the complications of owning property directly. Let's talk about John Paulson. He's well known for making a fortune during the subprime mortgage crisis. But did you know he also invests in real estate mutual funds? He focuses on funds that target distressed properties, banking on the fact that the market will bounce back. It's a clever strategy that shows the potential of mutual funds in the real estate game. Last but not the least is investing in real estate stocks. Another effective way to invest in real estate without actually owning property is to buy shares in companies that are deeply involved in the real estate market. This includes home builders, real estate developers, and property management firms. Many of these companies are listed on stock exchanges, which makes them easy for everyday investors to buy. Investing in real estate stocks has several benefits. One major advantage is the potential for dividends. Many real estate companies pay out a portion of their profits to shareholders as dividends, providing a steady source of income. This is especially appealing for those looking for regular cash flow from their investments. Additionally, these stocks can grow in value over time. As the real estate market improves and these companies expand, the price of their stocks may rise, leading to profits for investors. By choosing to invest in real estate stocks, you can gain from the overall growth of the real estate market without dealing with the challenges of managing physical properties. Stocks also offer flexibility that owning property does not. Unlike physical real estate, which can be difficult to buy or sell, real estate stocks can be easily traded based on market changes or your personal financial situation. This ease of buying and selling gives investors more control over their investments. And then there's Donald Trump. Before he stepped into the political spotlight, he was a real estate mogul investing in various real estate stocks. His business ventures often included publicly traded companies in the real estate sector, showcasing how you can benefit from the market without directly managing properties. Before we wrap up, remember that investing in real estate without owning property is not only possible, but can also be a smart move. Whether it's through REITs, crowdfunding, mutual funds, or stocks, there are plenty of ways to grow your money. If you found this video helpful, don't forget to hit that subscribe button for more tips on investing and personal finance. And if you're eager to see how to turn a small investment into something big, check out our next video, How I Turned $500 into $5,000 in 6 months, Step-by-Step Investing Strategy. You won't want to miss it. See you next time.